Good morning or afternoon, depending on where you're located. Thanks again for joining us. Today, we have an update with Microbix, talking about their year-end and Q4 numbers that were released just before the holidays. With me, I have Cameron Groome, CEO, Ken Hughes, COO, and Jim Currie, CFO. We will do a little bit of an overview of the year and the quarter and then open things up for questions. So as always, if you have any questions, feel free to input them in the Q&A box at the bottom. We'll try and get all of those answered. And as always, this will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And with that out of the way, I'd like to open it up for Cameron Groome to give us a little bit of an overview of Q4 and year-end results. Hi, Cameron.
Hey, hi, Deborah. Happy New Year, everybody. Thank you very much to all the participants for joining us on an update call. We're going to run through a little bit the year just ended, give some operational updates, and a little bit of an outlook for what we see emerging in fiscal 2023. I would urge everybody to read from the Microbix website our full Q4 disclosures package, which consists of the news release describing our year-end and Q4 results, the CEO letter to shareholders, the management discussion and analysis, and the full financial statements of the company, which for the year ended and fourth quarter, which constitute the full corporate disclosure alongside the annual information form of the company, which has also been filed. With regards to Q4, I'll just briefly touch on a few high points and hand it over to Jim for a little bit more context and detail. We had a reasonable Q4 top line bolstered by some better antigen and cap sales, but those were offset by the lack of any viral DXTM brand viral transport medium in the quarter. And those of you that are monitoring the wires may have seen that a new CEO was appointed to Supply Ontario just on December 23rd. So there's a lot in flux with regards to procurement in the province, and we continue to work with the authorities on directing that for our DXTM product line. In terms of our sales mix, strong on antigens and caps in the quarter, and no DXTM sales in the quarter. So a little bit lighter than the prior year that had each of those three constituents. In terms of gross margin, that is affected by a heavy weighting of lower margin antigen sales, specifically sales of lower margin antigens in the quarter that pushed down margins a little bit, along with some cost pressures not yet passed through to customers. SG&A was up. There's an increase in the quarter, and that's largely due to increase in selling expenses as we resume participation in trade shows and events for customer acquisition purposes, and a lack of grant offsets. Net, a reasonable quarter, not our best, but ends up another firmly profitable year for the fiscal year ended 2022. It's not quite what we were targeting, and that's, as outlined in my CEO letter, largely due to the major contract we signed in August, and that top 10 diagnostics company continuing unexpectedly to iterate on the final design of its point of care testing instrument and assays related to that was frankly unexpected by us, and that continues to impact the timing of revenue realization from that customer, although we are seeing quite a reasonable amount of service revenues as we work with them on this process of perfecting assays for that important instrument. And those same factors are likely to influence our Q1 and our Q2 of this year as well. We foresee fiscal 2023 as being very firmly profitable as well, but that profit will be certainly generated in the back half as opposed to the front half of the year. So overall, I would say that 2022 has been a year of transition from full-on pandemic in 2021 to a post-pandemic or at least endemic world in 2023, and whereby we generated another year of record revenues and another year of convincing positive net earnings for the full year. So, Jim, maybe I can ask you to provide a little more color in relation to Q4 and the full year.
I think my focus and comments here is on the fiscal year performance. Strong revenues. It was another record year of revenues, profitable revenues. As Cameron said, it was a meaningful profit year as well. We continued with our strong margins. We saw some improvement in margins in our antigen business, and we certainly have stronger margins in our QAPs and VTM business, which led us to a 58% margin. Our expectations for margins are probably in the 60% range, so we're not that far off where we had expected to be in terms of our margins for the year. It was a year where we've made a number of investments. Our cash position improved. We were at $13.5 million at the end of the year. However, we did make some sizable investments during the year. We paid off approximately $3 million in debenture and long-term debt. That decreased our interest load on an annualized basis by over $250,000. We invested $1 million in equipment, both new and replacement of aging equipment. We also invested in new labs and facilities, over $1 million. And we've also invested in some of the key areas that Cameron was talking about, sales and marketing, continuing to invest in that area, as well as research and development. It's key for us to be on top of what our customers need and invest in new products that come along. And IT infrastructure. So we've had a sizable investment in staffing, as well as ERP solutions. We're in the process of implementing a new ERP solution and an EQMS system as well. So we're investing for the future, and we've made those investments, a large chunk of them in fiscal 22, and we will continue to make them in fiscal 2023 as well. We've got a strong balance sheet. We've got current ratio for the year improved from 3.68 to 8.45. Our debt equity ratio improved from 0.55 to 0.33. So I think we're well positioned for the growth that we've been indicating we're on the cusp of for fiscal 23 and beyond.
That's great, Jim. And I think it's worth noting that, on top of the considerable investments that Jim has highlighted that we've been making for capabilities and capacity, along with debt reduction and share buybacks even, we're still ending the year with a very strong cash position and of over approximately $13.5 million. And as Jim has indicated, very, very strong and meaningfully improved financial strength ratios for liquidity and leverage.
Sorry to interrupt, Jim. I had a clarifying question. What is an EQMS system?
It's a quality management system, electronic quality management. This is Ken can better describe what it is.
Well, with that, we will let Ken do so, but this is converting the company from paper-based quality management records into a fully digitized system. For complex biologicals, as we make, there's tremendous detailed records for each individual batch of product. And those are literally telephone book-sized documents that are now being moved into digital form. And Ken, maybe I can ask you to start your comments with a bit of a description of what that is and why we're doing it.
Yeah, I mean, the cumbersome nature of a paper-based system, which is fully integrated and repeatedly audited and get great feedback from our auditors in that regard, I guess everybody's aware that we're ISO 13485 accredited, ISO 9001 accredited, and we operate a total quality management system anyway to be a regulated provider of biological solutions. But it gets to a point where there's a critical mass of paper that it would become an impediment to the growth that we're pursuing. And so to kind of get ahead of that, we've been digitizing our systems, and we have a program for the electronic nature of the quality management system where paper documents are transferred into a digital form and therefore easy to handle and manage going forward. And also with that, the enterprise resource planning software that fully integrates into that to manage the financial aspects of the business. This creates an efficiency which allows growth. We're investing in this, as we said we would. It's part of building capacity and capabilities for the growth trajectory we're on.
Very good. And what other comments would you want to make from an operational point of view, Ken?
Yeah, I mean, from operations, I mean, the stated objective for before 2022 and including 2022 was to build flexible capabilities and capacity. And we've done that. We've commissioned a number of labs and manufacturing suites. We've built teams and capabilities. And, this has been illustrated in how we've pivoted in the face of the pandemic. For instance, the clear examples would be all our QAPs, which are on the various variants of COVID-19, or indeed pivoting to make our VTM product portfolio, which will continue into the future. But as a consequence of the activity and creating that infrastructure, we have additional capacity on antigens, QAPs, and viral transport medium, and other special projects that may come up as we move forward with a very integrated R&D, quality control, quality management, and manufacturing group to allow us to pursue these capabilities going forward. So as we go to that, as our business continues to grow, we now have the capacity in place to realize that it's not going to be a problem in terms of the facilities, and we continue to add capabilities as we move forward, as we continue to build and diversify the business. So operationally, things are going very well, and we've been basically done what we said we would do was what we do.
Yeah, and I think that's a great point to make, Ken, that if anyone looks back over the history of our disclosures and the forward-looking statements made in them, we're very much executing consistently on what we say we're setting out to do. Our QAPs business over the past 3 years has tripled. Our antigen business has increased margins as we said we were targeting. And we created out of nothing the opportunity of our DxTM business, our viral transport medium, where we've realized over $10 million in grant and product sales income associated with identifying that acute need through the pandemic and now exiting it. So, timing is, and certain aspects of our customers' behavior is beyond our control. But the things within our control, I think we're certainly executing on. And
yeah, I mean,
go ahead, Ken.
Yeah, I mean, we have an excellent scientific and technical and production and testing team, which we've been building to address all these diverse opportunities and being able to pivot so well and build that capacity going forward. And we specifically put that capability in place. Examples would be we're currently launching a monkeypox QAP, which really illustrates the type of technical acumen we have. But also all the production processes we put in place are deliberately flexible and have a capacity so we can pivot into new product opportunities as we need to. And because obviously we're on a very rapid growth trajectory, that's in QAPs, also in the DxTM portfolio, and with the antigens as well. So we're continuing on that route.
Yeah, very, very much the case. And I'll make some concluding remarks. But Jim, was there anything further you wanted to touch on before that? Just in
no, I think I've covered off everything I wanted to cover off, Cameron.
Okay, very good. Well, to recap, I would say, again, we expect full year 2023 to be firmly profitable. We do foresee, due to customer issues, a softer first half, followed by strength. The realization of sales growth is, to a large extent, driven by what we see in the point of care testing area and opportunities to supply in-kit QAPs for such major customers. And by nature, we're subject to their assay and instrument launch timelines associated with that. I think we're satisfied with the operational and strategic directions of the company. We have the balance sheet to execute on these plans, and we're not certainly subject to market volatility, capital markets volatility, as we have no need to raise capital at this time. So we're not subject to the negative sentiment other than as it affects our share price in the shorter term. We are, as was mentioned, deploying capital as we generate it, both on enhancing capabilities and capacity on debt reduction, and as well our normal course issuer bid, otherwise known as a share buyback, is certainly active. And in the first 3 months of that program, we have bought back over 750,000 shares for cancellation. So that's certainly something that is being actively used, not just as window dressing.
Cameron, how much of that program remains?
We have the ability to buy, in theory, to buy back 5% of the shares outstanding, which is up to 7 million shares. There are, however, strict constraints on how those buybacks function imposed by the TSX. We can only buy back a portion, a quarter of the average daily volume in the 6 months preceding the start of that normal course issuer bid. We're not able to buy on an uptick and so forth. So it does have some practical limitations on how you can use it, but we certainly put it in place with the intention to buy back shares up to that limit to the extent permitted.
Okay,
so,
thank you.
Those are, I think, the conclusion of our comments. But happy to move to addressing specific shareholder questions, Deborah, or any that you've perhaps received offline prior to the call as well.
Sure, sounds good. Let's start with one for Mr. Hughes. So when will the physical renovation of the third plant be complete, and when do you expect it to be operational?
It is, and it is. is the short answer. So yes, we have a production suite in the third facility already operational and being used. We actually have some plans to build out some further space into the warehouse to build some additional functionality and capacity in the next little while. But the production suites that were going into the third facility are there.
Yep, our third facility is fully qualified under our ISO 13485 and 9001 quality systems and is fully functional for its intended uses. As Ken has indicated, that facility has a front end which it has office workstations for staff in different departments. The middle section of that building has been built out for DXTM production, and there's a considerable amount of warehousing space. So we're evaluating potential for other production or QC labs or other purposes in towards the back of that building.
And actually, to allow the accreditation for ISO 13485 accreditation, manufacturing has to be occurring in all buildings that are under the auspices of that. And in 2022, we added our Building 3 275 watt line under our ISO 13485 certification.
Yeah. In fact, we were looking at the potential to add a fourth building to our facilities, but we felt with some of the customer timeline delays, that was a little bit premature. We don't want to get, as the saying goes, too far ahead of our skis. So we elected to pull back on that for the time being.
Well, let's go thematically then. I see a few questions on VTM, so let's start there. So from one investor, why no sales of VTM, especially to others beyond the government of Ontario?
A lot of testing practices have changed over the past short while. For example, Ontario has moved from testing all comers for respiratory viruses to those in hospital, entering hospital, or in long-term care facilities. So patterns of consumption are renormalizing across not just Ontario, but multiple provinces. And in Ontario specifically, the whole supply chain has been reoriented in Ontario. The whole procurement practices are reorienting. In fact, if the new CEO of Supply Ontario was appointed on December 23rd. So we are on top of these matters. We are evaluating opportunities in Ontario and other provinces, but these things are very much in flux. And our big advantage, of course, is domestic production. And the closer you can get it to home, the better it is. So Ontario, we expect, will remain a principal client for DXTM for the foreseeable future. But it is not without lumps, unfortunately.
In terms of VTM, like if you're going to try and access different markets, do you need to change the formulation of it, or is it like a standardized product?
Formulation is driven by application. Our DXTM is currently qualified as a viral transport medium. Its formulation makes it compatible as a universal transport medium, but some of the work to make those claims has not been. And that may or may not be important to end users, but we have to respect the appropriate regulatory pathways. We have certainly ambitions to sell the product more broadly in Canada and have done so in small quantities. We do not presently have ambitions to extend that product to international or US sales, and that's something we'll certainly evaluate with our partners and stakeholders before we would move forward on that.
And are you still producing 50,000 vials a week?
No, we are not. We have sufficient inventory for our purposes currently, and we are not in production at the present time.
Okay, I'm just seeing if there's any more VTM. Is $2 million a good estimate for top line fiscal 2023 for VTM, or is it too optimistic?
We're still evaluating that. We have a conservative budget number for DXTM in mind, but certainly we'd like to exceed our budgets to the extent as possible. And given that certainly discussions are ongoing with different purchasers, I think it would be strategically inappropriate to put a number on the table as to what our current expectations are. We do see overall 2023 being another year of record sales for the company, but how that will be comprised between the three major operational lines of the company is something we'll see how it emerges. But we'd like to see certainly growth in all three if we can, or as many out of three as possible through the year.
Okay, then moving on to QAPs. Have there been any changes in the point of care diagnostic market that would impact demand for QAPs? Are you seeing potential customers coming to you following the sunsetting of EUAs?
The EUA question, and this is the emergency use authorizations of the United States, were permitted to be put on the market without the perhaps same level of scrutiny that they would need to undergo under the customary 510K, which is the predicate device approval pathway, or the PMA, pre-market authorization approval, where there is no predicate device. So there are a number of tests that are out there under emergency use authorizations. It's really a stage, I believe, certainly, and can please step in if you've heard much different. But what I've been hearing is that companies right now are being encouraged strongly by FDA to get their files in order because the FDA doesn't want there to be a gap and tests to be unavailable. But as a certain number of people have gotten their files in order, the door will be shut on those that have not. And they're not setting a bright line or a firm date by which this has to happen. But we are seeing more companies entering into dialogue with us about whether we can help them get their houses into order. So, short answer would be yes, but more of a process of persuasion rather than brute force on the part of the FDA.
And you're nodding. Did you have something to add?
Yeah, I mean, that's exactly right. The traffic to Microbix has increased as a consequence of this reality. People are anticipating what's coming down the pike at them, and if they're sensible enough to do that. And the use of our products to help them get it right is something that they're well aware of.
Yeah, and some of the key points that we've highlighted in the corporate presentation, which, as you know, Deborah, will be revamping to update in a short while. But there's some key points in there with, in particular, the flock swab-based caps are particularly well suited for point of care. The format, of course, emulates for many forms of testing how the sample is collected, so provides a streamlined and indicative simplicity to that use of controls. The long-term room temperature stability that we've demonstrated with our caps is also very key, because the controls under non-emergency use authorization utilization need to be able to be kept at the same room temperature storage conditions as the cartridges. You can't have one needing to be refrigerated or frozen where the other can be at room temperature. And they have to be very simple so that non-laboratory people that are not trained laboratory technicians can run the controls as well as the tests. So those are key. Another element is the flock swab itself, whereby the very quick and consistent uptake and release of analyte is very important in the context of the control, as the regulators really want the control to really test the lower level of detection of the test to see that it's working not just barely but optimally. And there's some real issues with other forms of controls where there's tremendous variability in the control, so you can't actually consistently test that lower threshold of detection. And that's a real advantage that we're finding is necessary for our customers.
The customers are well aware of Microbix's unique abilities in terms of infectious disease organism growth, purification, inactivation, stabilization, be it native, wild type viruses and other pathogens, or indeed viruses and other pathogens produced by synthetic biology techniques that we have in-house. So they're well aware of that. And then overarching on that is the quality management system we have to make sure that the product behaves the same way every time. And the customers are well aware of that expertise, which is specific to Microbix, if not unique to Microbix.
Okay. And then staying on the theme of caps, looking at this year's shareholder letter, you don't mention the 100 million market opportunity in caps anymore. Why has this opportunity changed?
I think we can't repeat the same things every time, or it'd be a pretty boring letter. I don't think our view on the scale of the opportunity has changed. Perhaps our view on the timing of that opportunity has, evidently. But we can continue to be very optimistic about our ability to realize, very material revenues in that segment. So I wouldn't change that viewpoint. I think it's a question of industrial sales, acquiring customers, seeing them roll out more assays on that instrument. It's a little bit like so I'm going to date myself. I'm not a gamer, but I guess it's an Xbox or a PlayStation or the gaming consoles. You can have the best gaming console in the world, but if you don't have games to play on it, nobody's really going to buy it. And so what we're doing is helping enable them to have more games to run on those consoles, more tests to run on those instruments. For each one of the tests that they plan to roll out, they need the accompanying controls if those point of care instruments are going to be permitted to be used outside of a clinical lab. And point of care is meant to be used in settings where you don't have access to a full lab quality management system and controls that come with that. So those are doctors' clinics, those are pharmacies, those are long-term care facilities, schools, workplaces. These applications require in-kit controls with the instruments in those quasi-institutional settings where there's going to be a relatively high volume of test usage on those instruments. And you don't want errors persisting or problems persisting and giving you false positives or false negatives.
And does the HPV opportunity remain intact? And how is that progressing?
Very much so. Yes, absolutely so. Microbix continues to be intensely active with human papillomavirus molecular testing. This is the virus that is the direct cause of cervical cancer in women. It's becoming a very common cause of head and neck cancers in men. It is a cause of other cancers in other geographies of the body. And historically, the means of diagnosing cervical cancer in particular was to examine cells from the cervix through a Pap test and then look to see if those had transformed into cancerous cells or sometimes high-grade precancerous cells. Molecular technology, PCR technology, enables you, rather than to look at the conformation of the cell and say this has transformed into cancer, lets you look years beforehand to say there is the presence of a form of the HPV virus that will or could cause cancer years down the road. So imagine the improvement to healthcare to say you are at higher risk of cancer. Let's watch closely to make sure that doesn't happen versus saying, congratulations, you have cancer. Those are two very different outcomes. And I'm very pleased that Microbix is now very much at the front of that transformation from looking for cancer to looking for the viruses. And we're helping multiple companies in multiple jurisdictions on enabling that transformation. And that will be a very material revenue generator for us in the not too distant future. We believe, forward looking.
And how are the delays with the large OEM affecting your revenue projections on this contract? Previously $5 million in the first year.
We had certainly baked in some buffer in our own statements to as to expectation. I think we've now used up that buffer. So we would still see around that number for fiscal 2023 from that agreement in our budget, but it will be certainly back-ended. And that is, that is unexpected. We did not foresee months of further iterating on that particular program, and that iterating is generating some service revenues for us, but it is not generating the high volume recurring product revenues that we were targeting yet.
Are there near-term opportunities for QAPs supply agreements with other OEMs?
Yes, there are. And discussions are ongoing on multiple files in that respect.
Okay. And then I think there was one last QAPs question. Considering repeatedly discussed delays in QAPs orders and the share price development over the last few months, it seems the capital markets has lost confidence in management projections. What do you actively do to make those QAPs contracts happen? And what is your base case for guidance for revenue in 2023?
We don't provide formal revenue guidance. Let's get that off the table. It's not something we're in the business of doing. We do see revenues being a record and certainly in the 20s, certainly well north of 20 million in revenues, perhaps not 30. But we are looking for another record. We are looking for another profitable full year. It's not to say we won't see a quarter or quarters of negative net earnings, but those are not sea changes. Those are blips. Further to our confidence, what we see day to day is our team working, supporting the teams at major multinationals to enable their very important new product launches happening and supporting existing and new products, tests, and instruments. And that's really where we derive the confidence in our outlook. When teams are working side by side on a daily basis, we have, in some cases, double-digit numbers of companies' instruments in-house supporting their product development. And these are not commitments that are made lightly on either side. So, it tests everybody's patience and sometimes faith when there are delays in realizing revenues. These are not, these are very concrete relationships and commitments that we're working with and working on.
All right. I don't see any other VTM or CAPS questions. I mean, a favorite is always, can you give us an update on Kinlytic?
Yes, the file continues to be very active, and we are moving forward. I would say in a direction of discussions that seems to be very satisfactory. And when we have something definitive to announce, we will be very pleased to do so. And I think our target certainly remains to move Kinlytic back onto start the funding to drive the work forward to generate new drug substance and new drug product, and move that through regulatory filings and bring it back onto the market. There certainly is a ever-growing use of long indwelling catheters to deliver therapeutics and other interventions for the catheter clearance indication that is really the tip of the spear for bringing that product back into the market. And there's also indications of increasing incidence of blood clots and need for thrombolytics generally. So we are seeing there is a stated shortage of tissue plasminogen activator in the European Union. We have received news of shortages of high molecular weight. This is the urokinase derived from pooled urine, which is not something that would ever be approved in the West. But there are shortages even of that product across Asia. So we definitely see a real material need for the return of Kinlytic into the marketplace, not just to provide price relief, but to provide added supply and added security of supply. And we see it as a very material opportunity, as do prospective partners.
I had a follow-up question. So after all these years waiting for a deal, what's your view of the main reason holding back securing a partner for this opportunity?
I think we were proceeding along a very good track in 2019 as the pandemic broke late in the year. And that certainly upended more apple carts than just our own. In respect to that product, companies that were in the specialty pharmaceutical field, and specifically companies focused on hospital-directed product sales, saw, again, patients weren't going to hospitals for anything but COVID, by and large, and that affected healthcare quite badly, but it affected the revenues of those companies, and they were not in a position to take on new development projects at that stage. So it's really only as we're coming into some sort of new normal that companies can look and say, yes, I'm ready to take on a development project. And it will be a $20 to $30 million US dollar spend to bring the product back and relaunch it. So this is why we're not doing it ourselves, is even with the strong balance sheet that we have, it would be an all or nothing bet for Microbix. Whereas a larger company in the context of a portfolio can more responsibly make that venture. And for us, we want to participate and absolutely believe in the upside economics of the product. And that's why, well, it has been written down to zero on our balance sheet. It still has attention with regards to partnering that asset and finding third-party funding, finding partner funding to drive it forward, not consuming Microbix's own capital that is that is, of course, being intelligently used for growing our immediate revenue businesses.
Okay, and going back to COVID, I think there's some misperception in the market that Microbix remains a COVID story. What percentage of business is now COVID dependent?
Certainly, the viral transport medium in the nearer term has had an element of that. COVID testing is broadening out as everybody knows, and I think most people have been sick with a flu or RSV this season. Respiratory testing is not just about COVID. So, our DXTM was initially used for COVID testing, but it can certainly be used more broadly for testing for respiratory and other viruses and other infections even. So in the nearer term, that could be tarred with that brush to some extent, the DXTM revenues. Beyond that, it starts to get very difficult to tag things as COVID related, as many of our caps are multiplex already. Respiratory caps are not a single, unless somebody's qualifying to detect a single variant of COVID and needs to remain qualified. So the what we call the proficiency and accreditation sales, while they may be COVID directed, are very secure. And more broadly, those are multiplex tests. So is a CAPS product that is a fourplex between COVID, flu A, flu B, and RSV. Is that a COVID sale? No, that's a respiratory disease sale. And whether COVID is up, down, or sideways really doesn't overly affect those sales.
When we talk to public health officials about what's next after COVID and what other things should you be involved in, two things really come up. Lots of things come up, but two things come up. One is HPV, which you've already had a question about. And the other one is antimicrobial resistance in various pathogens. Microbix has been deeply involved in both of these areas since before the pandemic and continues to be there. The launching of molecular testing for HPV was delayed because every PCR machine in the world was doing COVID. So we have a whole portfolio of new products coming out there, and we expect the ratios to change. Of course, I think COVID, I think we all know, is now endemic, and various variants are going to be with us for a while. But we have the capacity to deal with many other market opportunities, and I would just cite HPV and antimicrobial resistance as exemplifiers of that.
Yeah, and at the risk of tooting our own horn a little bit. It's worth perhaps listening in on some of the webinars that we've started to do with leaders in the industry, whether that's with Becton Dickinson and Memorial University with regards to COVID, whether that's about antimicrobial resistance, as Ken was indicating with the SpeedDX. Whether that's talking about sample collection technologies with CoPan. These are the relationships we continue to build, and working with leaders in the field continues to build our credibility and the comfort level that prospective customers become real customers, and we lock in increasing amounts of business in that regard. But it's difficult to do it, in a perfectly smooth exponential trajectory. Sadly, does not happen in the real life. So that's where we have a bit of the bumpiness quarter to quarter.
Okay.
I urge Jim to get us a perfect exponential revenue curve, but he just won't oblige me.
Well, you beat me to it. I was going to say, let's get Jim on the hot seat for a bit. So I've got some financial related questions for you, Jim. So first, you mentioned $3 million in debt reduction, while long-term debt is up $500,000 year over year. What was that increase used for? And true long-term debt reduction looks closer to $2 million year over year. Is that correct?
Yes. I'm just trying to recollect the long-term debt climb. There was a treatment. It was a financial statement treatment of the debt that impacted us just at the year end. It was one of a year end reclassification that impacted the long-term debt. But certainly we've had the reduction in the debentures, the $2.5 million reduction, and conversion of $500,000 was made in the April timeframe as well during the year. We also paid off a BDC loan in the area of about $250,000 during the year. Certainly, we don't expect to see any climb in our long-term debt in the near term. Fact,
I think it would be helpful for the person asking the question. Great question. A large part of the debt that was repaid was in the current liabilities section of the balance sheet in 2021. Ergo, it would not appear in the long-term debt portion. So you will see $2.2 million going to zero in the current liabilities section, and that was related to debt that was paid off as it came due rather than refinanced.
Yeah, valid point, Cameron. We had a couple of debentures that could be called, and therefore they were treated as current. And those were two that one was paid off and the other was converted.
Yeah. So there has been a substantial pay down of debt, as well as a BDC, another debt instrument that was repaid as well. And we'll evaluate, depending on the direction of interest rates, whether we should pay off further amounts of debt as well.
The other area that I'm just thinking about is we do have some climb in debt, and that's the FedDev agreement, where we get 0% loan for a project that we're working on with the federal FedDev, and that adds to our long-term debt. None of that is payable until 2025, and we are still getting loans on a quarterly basis to support our growth as well from the
I hope no one will mind us adding to 0% interest debt, if that's okay.
All right, I got one more for you, Jim.
Okay.
And I'm not sure if you can really answer this, but are you forecasting other quarters of unprofitability?
Well, it's back to the guidance thing, although I think Cameron's provided some guidance. But
I think that we're looking at a break-even number of approaching $5 million in revenues, depending on product mix. It can be lower than that or higher than that, depending on the margin mix in that particular quarter. So I think it would be surprising were we never to see a quarter where we dip into a loss. But we don't see those as being a systemic set of losses, more circumstantial and short term. So I wouldn't rule out losses, but I wouldn't expect a protracted period of losses.
Okay.
Does that? I didn't mean to jump in, but I know you're being circumspect.
Yeah, no. That's fine. I think, as you'd indicated before, I think you'd indicated to the audience here that we were looking at record revenues for the year and profitable revenues for the year. So, but it doesn't. Product mix has a significant impact on our margins and our quarterly profit and timing in terms of some of the larger orders that we get in, whether it's for VTM, CAPs, or our core antigen business.
Yeah. Depending on which side an order falls on the quarter end line has a dramatic impact on the top line, and the top line, of course, has an impact on the bottom line. So, we certainly can say, Q1 is not going to be a barn burner, and we'll see what the balance of the year brings. But we see revenues coming in much more strongly in the second half of 2023 than in the first half.
Okay. And then another one for you, Cameron. Why do you think Microbix is underappreciated or misunderstood by the market in respect to your company/stock?
I'm not convinced we are, Deborah, misunderstood or underappreciated. I think we just gone through, we're in the midst of, perhaps we're more than halfway through, perhaps we're not, but we're in the midst of a the most aggressive interest rate hiking cycle that has been seen in 40 years. And small capitalization companies across the board have seen tremendous pressure on their share price. You were mentioning some statistics in the healthcare sector more broadly, where all stocks effectively have been affected negatively by the high increased cost of capital. I think the biggest difference for us is that we have a quote unquote real business, in that we manufacture products that customers want to buy, and we generate significantly positive gross margins selling those products. So this is a real business. We have a real balance sheet with tremendous financial strength, $13.5 million in cash, and we expect to continue generating net cash in 2023. So, our business ultimately, water finds its level. And, this is where we will just continue building the real fundamental value and telling the unvarnished truth on calls like this. And investors will do their analyses and call things as they see them. And, sometimes we are surprised, as we have been on the timing of revenues from new customers. But we communicate the information as we receive it and as we see it.
Okay, thank you. Now, the remaining questions are a bit of a hodgepodge, Cameron. The first one's long, but it's the first question in your question box if you want to follow along. So I have noticed in recent shareholder calls that you mention M&A opportunities more often. Against all the bullishness around QAPs, VTM, and Kinlytic, we have heard from you in the past year. Oh, sorry, I said that wrong. Against all the bullishness around QAPs, VTM, Kinlytic, we have heard from you in the past years. We're facing delays now. Why not double down efforts in the already existing opportunities instead of diluting attention? So I guess just asking, where are you at with M&A? Are there opportunities you're looking at?
There are opportunities we're looking at. I mean, we're in a very strong position with as is pointed out in the question, with strong existing businesses. And it's a great question. Why are you risking getting distracted if you're looking at other potential opportunities? Well, there are two reasons why we would, why we are, in fact. One is, do opportunities provide complementary capabilities or product lines that enhance the business that much more? Second, are those available at prices that are less expensive or cheaper than where we are trading? Certainly, we're not going to pay a higher multiple than where we're trading for an opportunity. So it has to be a good value relative to where Microbix is. If we're going to pay that with shares, or if we're to pay that with cash, even, it's got to be compelling. So there are two categories of opportunities. One is, are you just adding size? Now there's some value with respect to that. People like scale in companies. More people watch the heavyweight fight than the bantamweight fight because of that issue, and larger companies can trade at higher multiples than smaller companies. But we would really question, is that enough? We would much rather look at an opportunity where there is some really compelling strategic value to that opportunity, where it adds some capabilities that we don't currently possess, or adds a product line that allows us to cross-sell more products and add a new base of customers to who we can sell more products. So those are the things we will and are looking at. But to be damn sure, we will measure twice and cut once before we transact on anything. But it's great to be asked. You don't have to dance.
Okay. Another long one, Cameron, which is now number one in your box, if you want to follow along with me. Cameron has talked about on-site due diligence efforts undertaken by potential clients of the company's facilities in the past before. How many prospects have decided to continue work with Microbix? How many are waiting to do business with you later because they can't be serviced by you now? And how many have walked away from a potential collaboration, and why, if this has happened?
That's pretty granular. Let me think about how deep we'll go down those particular rabbit holes. But certainly, we do have companies come periodically to visit us and do due diligence for audits if we're a supplier to a company, they will sometimes have the right or obligation to come in and make sure that our quality systems are as they're represented to be, just as we are audited regularly by the ISO accreditation agencies. So that happens periodically. Some of those audits during the pandemic were moved to virtual audits, where it's a documents review rather than a physical site visit, but some of those are coming back to be more in person, which certainly easier to do and we're happy to do. I'm not aware of anybody that's come and audited or visited our site and declined business with us as a result of such a visit. Quite to the contrary, I think it greatly adds to the comfort and confidence in the company when those visits take place. With regards to how many companies are waiting to do business with us, I think it is more of a two-way interaction. There are multiple companies that we're providing evaluation samples to, determining whether they can use off-the-shelf products or need custom products from us to satisfy their needs. And I'm only aware of one instance in which we were not able to come to agreement on price for a particular project piece of work. And for a portion of that, that company has gone in a different direction, and we wish them well, but it's an open question as to whether that other pathway they pursued will succeed. So, of certainly many companies that are in discussions or currently working with us, I'm aware of one instance in which we didn't get a piece of business for, and the reason being what we feel was an unrealistic price expectation. We don't take on businesses at a loss. If somebody else will, God bless, but it isn't our business.
Okay. I've got
Jim, Ken, anything you want to color on any of that?
We have multiple site visits and virtual visits every year, be it from clients or regulators to audit formally or informally our quality management system, our technical capabilities, and so on and so forth. And to Cameron's point, they always walk away with a good impression, and we have never lost business because of that. We operate a very tight ship from a quality perspective, and our scientific and technical and production capabilities are well understood and manifested in these audits. So we always do very well, and we're used to getting good feedback from them.
Yeah, I think while our customers, and they may not necessarily be under the control all the time, meet their expectations or deadlines, we as an organization certainly do meet our deadlines, whether it's on a research and development project or launching a new product or shipping a new product. We always meet our commitments. And I think that's seen as a very, very positive with our customer base.
Right.
And this is not to say that we haven't faced supply chain challenges of our own, be it delivery timing, be it quality issues that we've seen as a result of all the disruptions going on. But I think we've done a very good job of managing through those.
Okay. And then I had a follow-up question from when we were discussing Kinlytic. Has the company analyzed selling Kinlytic outright and using the proceeds to buy back stock?
Kinlytic requires the technical knowledge that Microbix has. For a purchaser to be successful, there really has to be a process of either support or knowledge transfer. And in our evaluations, we just don't see, we would much rather get tens of millions every year in a few years following the relaunch of Kinlytic rather than sell it for a few million today and walk away and not get the benefit of that. So again, we're about building value in the medium and long term for the business, not about crystallizing it that way. And there's a bit of, I think, misunderstanding in how normal course issuer bids, share buybacks work. You can't just walk in one day and say, oh, I like the price today, I'd like to buy back 500,000 shares. That's not the way it works. You're allowed to buy a specific volume of shares every day when this stock isn't, and you cannot uptick the stock, so you cannot drive the share price higher. So the stock buyback has to function over time, and you have to look at it as management, say, what is the weighted average price at which we're acquiring those shares? Now, the last public offering we did was at a 60-cent share price for a unit of a share and a half warrant. If you look at the imputed value of the warrant, you're somewhere 50 to 52 cents effective value of that share. So we look at things and say, certainly we've built a hell of a lot of value in the business since then. So we feel very good about buying shares back at or below the price of that 2021 offering. So, and we'll continue to do so actively almost every day.
I had a throwback question that was previously answered. Can you just update us on the status and stage of the repurchase plan? Sorry for the repetition.
Certainly. The repurchase plan became the normal course issuer bid, became effective October 1. And we bought back shares in October, in November, and December, closer to 400,000 shares in October, and closer to 200,000 shares in each of November and December. So over 750,000 shares have been repurchased, and the October, November ones have been canceled and have been deleted from the base of shares outstanding. And I'm sure the December ones will be in the next week or two. And likewise, we'll be continuing to decrease the number of shares outstanding somewhat as a result of the normal course issuer bid. Somebody was just saying you can use a block exemption. You can. There's some discussion between TSX ongoing as to whether the block has to be an internal cross at the dealer running the offering, but this is all inside baseball and technicals. But if anybody has a block they want to sell, please reach out to the company and we'll see if we can arrange to buy it through the normal course issuer bid. Just in terms of shares, certainly you see a substantial and increasing ownership by management over time. And I think that is another expression of our commitment, our belief in what we're doing.
Okay, I had one last question. It's for Ken. So is the BSL-3 lab built yet? And what advantages will that bring?
Right. So the BSL-3 lab has been planned out, but has not been operationalized. The BSL-3 suite has not been operationalized as yet. And the reason for that is simply the volume of work that's underway. We have so much going on right now that it's been put in something of a holding pattern, but you can expect lots of progress in this year. But the planning is complete. We expect to operationalize it in this year. But right now we're focusing on the opportunities in front of us at the CL2 level, which are already there. What will it add to us? It will add additional capacity in portfolio. We're always building capacity to service the upward trajectory of the company, and that will just basically blend straight into that, provide us with other product development and realization opportunities.
Well, and one comment that we haven't chatted about, while we've got the cash to make investments, it has not stopped us in approaching the governments for funding support. So we continue to look for funding support to support projects like we just talked about, and we hope to obtain some further funding as we have in the past.
Yeah, we'll continue to use our capital judiciously, but there's also a value when companies are looking to rely upon us as a critical sole source supplier to them. You need to be able to show some balance sheet strength. So it's not like we can just that we want to just throw all our cash all at once into all sorts of things. One, we want to grow profitably, but we also need to demonstrate the financial strength to companies. And we can certainly, as governments, as Jim was saying, and as governments look to help drive economic growth, we can make legitimate asks and saying, we might not prudently be able to undertake this as soon as we might be able to if we have some support by the government. This will add jobs and this will add economic activity for the province and the country, as well as accelerate the creation of value for shareholders. So it's a balancing act, and I think we're doing a reasonable job of it. And speaking of jobs, I'd also just want to take a moment to compliment and thank all the Microbix staff. I think, our job as senior management is really to enable everyone to do their best work. And everybody really is stepping up and doing just that. And it's a privilege to work with such a wonderful team of people that are not only talented, but just damn nice folks as well, with 2 or 3 exceptions.
I guess the last question that I have, Cameron, is looking into, this year, what sort of catalyst can investors expect? Maybe, give some exciting things that investors can look forward to.
I would like to see, and I would expect to see some very material growth in our QAPs business. As things do click into place, and there'll be C-level executives at companies, many times larger than Microbix, that will likely have their heads on the block if some of this stuff doesn't happen. So we do have a reasoned belief in realizing some of what we're talking about with regards to QAPs. Second, I think we will see some strong resumption of acceleration of activity in our antigens business as well. Some of our product lines we see going flat out for the balance of 2023, and making product as fast as we can manufacture it and release it. But that is multi-month production cycles, so it takes some time for that to be realized in the revenues. Order timing certainly is an issue when revenues are recognized. Third thing, I'd very much like to see a Kinlytic alliance in 2023, and have reasoned optimism that will happen. And then other opportunities, we'll see how those emerge. Certainly, I'd like to see the resumption of some order flow, and hopefully with some continuity associated with it, with Ontario and others with regards to DXTM. And we'll do careful evaluation of opportunities to add strategically important business lines to the company as well from an M&A perspective. So I think on all 3 of our business lines and more, there are opportunities. So there are at least 5 that I would identify from what I've just said.
I think that's a good summary. Ken, Jim, did you want to add anything to what we can look forward to in 23?
No, I think those 5 aspects that Cameron just touched on are dead right. There's the 3 elements of the core, which is QAPs, antigens, and viral transport medium portfolio. And we have M&A and Kinlytic opportunities going forward. But other stuff may come up. We have flexibility in our capacities and our manufacturing and development capacities. So we can be responsive to that and pivot like we did when the pandemic started. There'll be other pivots to do, and we'll be set up to do that in the infectious disease diagnostic space.
My only add is that I think we've, I'm on top with what Cameron outlined, and we've got the financial and human resources to make these things happen.
Right.
Yep, and I don't see that there are specific issues holding us back. I think it is very much a company that is advancing and continues to advance, and we've gotten to a position of relative strength, and we're going to keep building forward from that position of strength.
Great. Well, I think that's a great place to wrap the call, unless there's anything that we missed.
No, I think let's call it a wrap. We're
Okay,
quarter past the hour, and just thank everybody. Thank the shareholders for your time, attention, and continuing support. And we're going to keep building value for you, and we'll see it recognized in due time.
Yeah, thanks everyone for participating. If you have any follow-up questions, feel free to reach out and I'll get those answered for you. And thanks, Cameron, Ken, and Jim for your time. And Happy New Year, everyone.
Always a pleasure. Happy New Year.
Yeah, Happy New Year. Thanks all.
Take care.
Bye.
Bye.